Welcome to Old Fashioned Finance, the podcast that mixes cocktails and high finance. I'm your host, Caleb Frankert, and I'm joined by my good friend and fellow money muddler, Jason Burnell.
Caleb, can a podcast about finance be entertaining?
Not without alcohol.
All right, let's mix it up. Yeah. Hey,
It's been a little while.
I know. Hey, we don't have kids in here this time. It's great.
I know.
They were really cramping my style.
I thought it was a blast. I know you did too. It was fun,
was
definitely
awesome.
having the kids. But now we get to drink cocktails and not mocktails.
Yeah.
So I'm glad that we're
I know.
back to that.
You know, my consumption of alcohol did drop significantly during those 3
me
weeks.
too. I was getting worried about
Yeah.
myself.
Yeah. But did you stop buying liquor? That's the real question. You don't lie to me.
Well, we went on a little mini vacation, and I picked up a couple bottles.
Yeah,
So,
me too.
and you did too.
I brought a box home.
That was not a mini vacation nor a mini haul. Okay. So first of all, if you're joining us for the first time or the 68th time, because this is episode number 68, remember we're a podcast and we thrive on your likes and shares and all that kind of stuff. So if you are listening on Apple Podcasts or Spotify, Google, wherever, and you can rate the podcast or give it some thumbs up or 5 stars, that makes our podcast easier to find for other folks. So
write a review if you can. That's even better.
yeah, if you can write a review, hopefully it's good stuff. But hey, we'll take whatever we can get. If you enjoy the podcast and you know somebody that might enjoy it, and
Sweet. Can we drink now?
yes, we can. So Jason, today we are drinking, let's tease the episode a little bit.
Okay, yeah.
Today's episode 68, When the Market Gives You Lemons, ... Jason, what do you think comes next?
Oh, make some lemonade, baby.
We're drinking lemonade today. Bourbon lemonade, that is.
You must be from Kentucky.
No, but I think I would fit in just fine.
That's right.
So yeah, we're drinking bourbon lemonade today. I've never tried this before, and I'm wondering why have I not tried this before? So let's get into the recipe a little bit if you're mixing things up at home with us. It's an easy one. So this is one of those recipes that the only thing I could find said like 1 part this, 2 parts that. So it really depends, but I don't like to do math because I'm a financial advisor. So, I went with 2 ounces of bourbon because that's our base liquor in this drink, and we usually do 2 ounces. 2 ounces of Cointreau also.
Yeah.
Any orange liqueur will probably work, like a triple sec or something like that.
Sure.
Although Cointreau is head and shoulders above.
So much better. It's
Now,
worth the purchase.
I don't know because we haven't had a sip of this yet. Maybe triple sec would mix in okay. 2 ounces of bourbon, 2 ounces of Cointreau, triple sec, orange liqueur, whatever. 4 ounces of lemonade.
Yeah.
We use country time because we're fancy. And we're going to garnish that with a lemon slice and a maraschino cherry. And this is one of those times where we are using the bright red cherry because it just feels like it fits with this drink.
we upgraded to the great value maraschino. No, it's definitely bright.
Well, we
red.
had to get our sponsors in there,
Oh, yeah.
right? Country Time Lemonade and Great Value. Just kidding.
We are an
They do not
sponsored.
support this show. They don't pay us anything. I'd be open to that.
Yeah, exactly.
All right,
So if you know anyone,
in the spirit of, the markets are kind of giving us lemons right now. We're going to make lemonade. We actually made lemonade, bourbon lemonade in this case, Jason. Cheers. Let's see what it tastes like.
all right.
Very orangey.
Oh yeah, a lot. There is. I'm gonna say there's too much Cointreau in there.
Yeah.
Yeah, there should be. I can't even taste the lemonade.
That's funny. Yeah, you really can't taste the lemonade a whole lot. It's there.
I'm gonna
It's
put
there.
this lemon in there. That might help.
I'll tell you what, I can't taste the bourbon. Do you taste the bourbon?
Not really.
Okay, so this
Yeah.
could be a dangerous drink. So here's the deal.
I mean, there's 2 ounces of bourbon in there.
That's in there somewhere.
Yeah. So I don't know. I mean, I think
Hey, the flavor's good, I think.
the flavor's good.
Yeah.
It's again very summery,
Mm-hmm.
which is good. I mean, lemonade, summer. Come on, or fall. It's
Well,
coming up quick. So
oftentimes, Jason, we see vodka mixed with lemonade.
Yeah, right.
We went on a couple golf outings. And they had spiked lemonade hole, right?
Yeah.
I can't taste the bourbon in here. For people who are trying to cover up the alcohol, this might be a recipe for them. You agree?
Yeah, definitely. It's very sweet, and that's usually the goal when you're trying to hide the bourbon or whatever liquor of choice you put in your drinks. But no,
I don't like to hide bourbon.
No, me neither. So I think that's probably why I'm frowning just a little bit.
Yeah,
I think there's too much Cointreau.
Yep.
We would have to
I think
maybe
I'd back the
modify this a
Contro
little
down.
bit. Yeah, maybe like an ounce and a half of Contro.
Actually, I think an ounce is where I would start. But really, even when you're looking at 2 ounces to 1 ounce, that's still a lot in any other cocktail. I think I would back the Contro, and I like
lemonade.
It. What's that?
Maybe the rest lemonade.
Maybe more lemonade.
Yeah, because it's way more orange.
Yes,
than lemon.
I think I'd back the Contro down to a half an ounce.
Yeah, that's a big change.
If you're trying it at home and this is too sweet and you want the bourbon to come through a little bit, I would say use a higher proof bourbon. We did use a lower proof bourbon.
We did,
this one.
Yeah.
I'd use a higher proof bourbon probably, and I'd back the Contro down to maybe start with an ounce or 3/4 of an ounce, but I bet you I would end up backing that down to a half an ounce, and then pretty good drink.
I don't want to give any false impressions. It's actually a good drink. Mm-hmm. It's good. It's if you like the taste of bourbon. Yeah, you better back the Contro down.
Absolutely. Yeah. I think that's a good disclaimer because the Contro is covering a lot up. I like the orange that's coming through, and I'm getting a little bit more of the lemonade here as it's settling.
We threw the lemon slice in there, which I think
that helps.
That helps. So, yeah, no,
the essence of the lemon peel in there. Right?
Essence. Oh gosh, now we're fancy.
We are not fancy. That's one thing that we are not. So okay, hey, this is I could see
good summer drink,
almost like a punch. Throwing this in a big old punch bowl and serving this if you are entertaining guests. I'm sure this would be a hit.
Yeah,
just like we laid it out. But if you like a little bit more bourbon, I would make those changes. Jason, let's get into the finance topic here today. When the market gives you lemons, what are we talking about? We are in, technically, a bear market still.
Yes. Yeah.
We haven't come back up all the way out of the bear market. So we talked a few episodes back, maybe it's been more than a few. That we're in a bear market. We talked about in that episode, what does it mean? How long do they last? All that kind of stuff. So what we're seeing here at Blue Jay Financial Group, where we work, we're financial advisors, is how do we make opportunities out of, what the markets are giving us? Because there's one thing that we can't control in all of this, and that's what the market does, right?
Absolutely.
And we tell clients all the time, look, this is out of our control. Mm-hmm. That doesn't mean that our allocations are not where they should be, but the market's going to do what it's going to do. So most of the time it's up, but when it's down, let's talk about some of the things that we can do to be opportunistic and per se when the market gives you lemons, how do we make lemonade, Jason?
Yeah, so some of these things are things that are like, okay, I need to feel like I'm doing something during this
which is
period.
cathartic, right?
Yeah. I mean, so if you're feeling that feeling or your advisor is giving you the impression of like, hey, we should do a few things, these are some of the real simple, easy things that are mostly behaviorally based. They're not really...
Yes.
They're not complex.
I think something you just hit on, like giving the impression of doing something. I do feel like sometimes advisors, when the markets are not doing well, and we know that we can't control it, there is that desire to give the impression of doing something, whether it's for clients or whether it's for us, we got to be doing something, right? We can't just sit back and go, it'll come back. It's true. It will.
Right.
But what are the things that we can do? Well, a lot of times, the first thing you think of is the wrong thing to do, right?
Exactly.
We should be selling. We should be moving this, that, and the other.
Well, we should be doing some kind of fancy financial strategy of, investing in areas that are more conservative or maybe more cash. And it's just very much, it's checking the box of like, okay, I did something when things were bad, and it's somehow going to make a difference. We don't know. I mean, honestly. And these things will actually make a difference.
Yeah, and I think that's the main point there, right? So if you're going to do something, because let's be honest, we've been advisors for a while, and
I'm bald.
When I started this business in this business, I had a full head of hair, and now I'm right behind you, buddy. So,
no, not.
But most of what I have is gray now. So either way,
yeah, that comes with the territory.
We generally do something. So here's a way to think about. All right, if you're gonna do something, let's make sure we're doing things that actually do make a difference. Right. So we can't control what the market's doing, but what are some things that we can do that actually moves our financial plan forward? Right. That we're actually still making progress when it feels like we're taking 10 steps back because of what the market's doing. So
absolutely.
Let's get into, and I think the most basic and obvious one, we're sort of talking about it right now, and I've got really 3 areas here to talk about. The first one being maintaining / increasing your contributions. Right. Okay. Right. So, it's important, I think, when we always talk about stick with the plan, trust the plan, keep doing what you're doing, right?
Yep.
that sounds like not real advice. It sounds like it's, don't do anything, right? But it is. And, if we talk about the impact of maintaining our contributions in a down market, Jason, what does that do for our portfolio? What good does that do? How does that get us ahead?
Yeah, I mean, I would describe this as a supercharge to your portfolio, a dose of nitrous, whatever you want to call it, rocket fuel. Markets are and I always use, I'm like apparently old, but in our town,
you are.
Growing up, we had this gas station. It was at a Super Kmart.
Oh, right? Yeah, Super K. Blue light special.
The blue light was flashing.
I love it. I worked there, Jason.
Yeah, I know. I remember.
You're speaking my language.
Yeah, so like when the blue light was flashing, you were getting some 5 cents off a gallon of gas, and
people would line up.
It would be ridiculous. So in my mind, I use that as like, this is the blue light is flashing. That's
great.
It's time to increase. and honestly, I think during this, period of time, people have a tendency to want to be like, I'm going to put more cash in my savings account. I don't know what's going to happen. Like, if you have a fully funded emergency fund,
yes,
don't put more into your savings account. Yeah. It's the safest way of losing money.
Yeah, if your emergency fund is established and funded, and your sinking funds, which we've talked about, you're on track with those, right? Why would you stock up more cash unless you really think that things are going to tank? But again, we're not trying to time that. This is a great analogy. I'm glad you brought up the blue light special, because I worked at Kmart back in the day in high school, right? When I would get paid and I would put $20 in my car. When the blue light was flashing, I'm like, hey, everybody, I'm going on break. I'm going to go fill up. You know why? My $20 went further. I got more gas for that same $20 that I was going to put in anyway, right, Jason?
Yeah, absolutely.
And the same is true when we're talking about the market. Yep. Stocks, right?
Yep.
Stocks are on sale when we're in a bear market, for crying out loud.
Exactly.
Who doesn't like to buy things on sale?
Absolutely. And I mean, good companies have been sold. I mean, these are like the bread and butter without making like specific recommendations.
Which we won't.
We won't. I mean, it is like easy to go out shooting fish in a barrel almost.
Yeah.
I mean, you could pick a few good mutual funds that are oriented in a mix of a little bit of everything, and probably really and I mean, again, it's a little bit more timely right now. I mean, the market has been moving around, both positive and negative. I mean, and so it's interesting that when I talk to clients, I'm just like, I need you to think of like somehow connect that this is on sale. Okay. And I think that's like, we live in like a largely German, like conservative area,
which is okay, by the way.
Right. And people use the coupons and they go to garage sales, and
we haven't hashed this out on the podcast yet. Is it coupon? Is it coupon?
Coupon? I don't know. I say it all different ways just to be interesting, but and I think that's contrary to what the news media and stuff is telling you to do. They're telling you to panic,
because that doesn't sell newspaper. Well, who buys newspapers? But that doesn't get ratings.
I have 3 of them sitting on the table. Come on, man.
Remember what you just said about being old? Yeah.
Dang it.
So yeah, buying things on sale. Absolutely. Who doesn't like to buy things on sale? It feels like you have to disconnect one wire in your brain, right? To maintain, and even the slash here in this heading is increase contributions, right?
Right.
Let's get more aggressive, and this kind of plays into the Warren Buffett philosophy, which actually I don't know. We don't plug other podcasts a whole heck of a lot.
No,
but we found a podcast here within the last few weeks. They liked our page. It's really hard to find a podcast, even if you're looking for it. By the way, that's why liking and reviewing is so helpful, right?
Gosh.
But there's a financial advisor 60 miles away from us that has a podcast. The Invested Dads, they're pretty entertaining. They tell dad jokes, which I'm all for.
Yeah.
It's good information. There's a lot of similarities, but they just did a Warren Buffett episode that I thought was really, really, really good. And, a lot of it was going through some of his quotes and things like that from his time. And a lot of people look at him as the best investor of all time. It's not rocket science. No. It's discipline, and it's kind of contrarian. But one of his most famous sayings is, when people are greedy, be fearful.
Right.
And when people are fearful, be greedy. Are people fearful, Jason? Just turn on the TV.
Oh my. It's funny because I think about the headlines, and when I'm talking to my kids, and so I'll give her a little bit of grace. My 7-year-old daughter, who was on the podcast, I said, "Hey, remember the war in Ukraine?" And she's like, "I totally forgot about that."
Yeah.
And again, they're selling something totally new already.
Yeah.
Is the war over?
No.
Absolutely not.
Is it worse now?
It's probably worse. Okay. So like, again, that panic, it's an easy drug to, inject yourself with. There's no doubt about it.
Well, and we try to keep these episodes as evergreen as possible.
Yeah.
This specific bear market, right? There has been no quote unquote safe haven. Stocks have been punished, bonds have been punished, and let's be quite frank, your cash is being punished too. Crypto has been hammered.
Places that were great in the early part of this bear market, like commodities, now have gotten punished.
Getting beat. Yes, absolutely. So like precious metals, all that stuff.
Yeah, industrial metals, any of that stuff.
So, you got to look at all of these hard assets. And, I look at equities, bonds. Mm-hmm. We own something. Remember, we own something.
Right.
Okay. It's not just a fictitious number that populates on a statement. So things are on sale. I like buying things on sale. And this should be an opportunity if you can disconnect that one wire on the side, the one side of your brain and say, I'm going to be a little crazy. I got some extra money sitting in savings. This is when you increase your contributions.
Right. And just to be clear on this too, like make it easy. Okay. So increase your 401k by 1%. Set up an ACH to put money into your Roth or your traditional IRA.
I was looking at clients' IRAs year to date. We're doing a bunch of reviews here in the next couple of weeks. Just looking at what we're on pace for. If you're $1,000 behind pace, today is a great time to just say, we're just going to get up to pace.
That's right.
Right? With maxing out our contributions for this year.
Absolutely.
Yeah. Good opportunity.
Sweet.
I like that a lot. Again, it's the contrarian in me. If it feels wrong, it's probably right when it comes to the markets.
Right.
Right.
Good thing that worked with you and your wife, right?
It felt right. It felt right for me.
For you, I'm talking to her.
I'm very contrarian. All right. So other things that we can do, because I think we've hammered that one a little bit, but it's good. That's like you said before, that's a behavioral type of a thing.
Absolutely.
Now, here are some more concrete things that we can do. Okay. So I think this is a big opportunity. We talk about it a lot, especially this time of the year here in the office. If you're one of our clients that's coming in for a review,
get ready.
I'm trying to think of when this episode airs. You may have heard us say this, or you may, get ready because we're going to talk about this. And that's Roth conversions. We talk about Roth conversions a lot on the show. But Jason, let's get into why right now in a bear market, this would be making lemonade out of lemons.
So, and to not make this too technical, when we do a Roth conversion in a bear market, many times we're converting traditional IRA assets over, I said assets, shares, the actual investment itself over to the Roth. So we're just picking up a pile of XYZ ETF mutual fund and plopping it over into the Roth, knowing that we never sold.
Yeah, we're just changing the shell account that it's in.
Absolutely.
Yep. So and to keep this even less technical, I guess to clarify, if you're listening, if you're new, you haven't heard us talk about this before, a traditional IRA or any traditional retirement asset has not been taxed to any extent to this point.
Right.
So anything that you do, moving money out of that, comes at the cost of taxation and maybe penalties depending on where you're at, what age you are. A Roth conversion is taking traditional assets and saying, hey, Uncle Sam, I'm willing to settle up on the tax bill for this pile of money, whatever you decide it to be, right? And we're just going to move it to a Roth account, a different shell, which will never, ever be taxed again, right? So long term, great.
Like never, ever.
Like never, ever again. So when we're talking about taking an IRA that was, let's say it was $100,000 at the beginning of the year, Jason.
Yep.
And now it's worth $80,000.
Right.
Well, would you rather pay taxes to do a Roth a Roth conversion on $80,000 or $100,000? I'd rather pay taxes on $80,000.
Right.
So that's why this is a great time to do this. And like you said, there's a good reason for transferring the assets as is and not selling.
Right.
And waiting a couple of days and repurchasing assets for a few reasons. But one, we just saw over the last week, the markets ran up like 7.5% like that.
Yeah, exactly.
That would have been horrible timing to sell and then try to buy back in. So we're not skipping a beat by just transferring the assets.
No, I mean,
great opportunity long term.
You never give up that ownership and then and forever tax free. I mean, and so we can do the math, and there's lots of really cool calculators out there that show you the impact of that. And just how much more spending power you will have. And when we ask clients this, and this is really like, look yourself in the mirror, are taxes going to go up in your lifetime? I mean, the answer is probably.
Yeah. Okay? Do you ever think you're going to be in a lower tax bracket than you are now? Let's be real.
Probably
at the rate
not.
Our government is spending money,
Right.
That has to be funded somehow. So
exactly.
Taxes, folks.
Exactly.
I think that's a great one. Roth conversions are huge. And right now, the impact is it's a better opportunity to save money now and pay even less in taxes.
One last thing on that, though, before we move on, is that make sure if you're, doing some of this stuff on your own, that you might want to seek some professional advice on this one, just to make sure you understand. If you convert $100,000 account, there's going to be a significant tax impact, and it also impacts your other income. So everything's combined as income. So you just need to be careful.
It's a great point. And depending on where you're at, Jason, if you're retired and you're on Medicare now, that can affect some of those things too. Your Medicare benefits and some other things.
Sold a business, sold a house, big cap gains is all impacted.
Capital gains rates. There are definitely, it's a big impact. This is a big decision. I always hold my breath when we do this. It feels a little scary, but it should. But yeah, have your tax person involved, your financial advisor. Make sure they're on the same page. One of the great things about us here is we've got tax experts,
right?
We've got financial planners, advisors. We know the impact, so make sure that you're working with somebody that knows the impact and walks through that with you. You don't want a surprise come tax time. However, all that being said, as dangerous as these can be or feel, they can make a huge difference on your long-term savings goals.
Right.
A huge difference on your tax rates way down the road. It's a great idea.
Yep.
Let's get into another great idea, Jason. The last one that I've got up here, it also involves taxes, and that's tax loss harvesting.
Yep.
Sounds confusing, doesn't it?
Yeah.
Real quick, explain what we're talking about.
Yeah, so here it's the way you can offset a large gain, okay, by selling an asset, both of them, okay, by selling an asset with a big gain and offsetting it with an asset with a big loss.
Yeah. Okay. When the market's down 20%, you have some losses.
That's right. And so, you might own a company stock or something that you rolled over into a regular account, just a regular brokerage account, non-qualified money. And it could have, let's just say it has $10,000 in gains. If you sell a different position and it has $10,000 in losses, you just wash that thing away, and you now have zero capital gains as a result of that.
Yeah. So if you've, like you said, there in a down market, you're bound to, if you're rebalancing and doing those things, you're bound to have losses. But also, if you've been invested for really any period of time,
right? I mean, if you were invested last year,
right.
Odds are you had some gains.
There's some gains to offset.
Right.
And yeah, from on a non-qualified account, this doesn't really make a difference on a qualified or a retirement account, but in a non-qualified account. And let's not just think about investments, right? I had a client that called, when the market officially hit bear market territory, and that's when people start to get nervous. However, I really liked where his head was at. When we were looking at tax loss harvesting, he said, hey, I sold a piece of property this year, and I've got a $30,000 capital gain that I don't want to realize, or I don't want to pay, right?
Right.
So I know we're down. This thing's going to turn around. I don't know when it's going to turn around exactly, but what could we sell right now at a loss to offset this? And I'm thinking
almost anything.
Great, right? I'm like, this is how we need to think, right? This is making lemonade out of lemons.
Right.
We know that the market's going to recover, but taking advantage of, and this is, by the way, if you are emotionally attached to any of your positions and they're down, we know that some of you out there have that, right? It's a really good time to make it a little less of an emotional decision to say, you know what, time to cut bait on this one.
That's right.
We're done, and we're gonna negate that gain, right? We're gonna use it to our benefit, and it's a good time for us to reposition into something that again is undervalued.
Right.
It's not always the same stuff that goes down in a bear market that leads us back the way up, and we've talked about this.
And so in your portfolio, if you're not having a capital gains conversation, it's something that needs to be looked at. Now, we trade and our client accounts, and early in the year, January, we created some capital gains, and now we're able to offset those with some losses. In your example, the $30,000 capital gain, we're talking let's just use a 15% tax bracket. I mean, that's a significant savings for the client if you're able to offset the entire gain with a loss. And granted, you got to have a big enough portfolio in order to do that, but it's possible.
Absolutely.
And it was actually pretty smart of that client.
Very smart.
To be thinking that way and unemotional.
Yes. And, in his head, he's thinking, I know this is going to come back up, and I don't want to I want to sell and buy something else immediately.
Right.
I don't want to be missing any time in the market. again, we talked about last week. Want to keep this evergreen as possible, but again, there's what a Roth conversion could do for you, right? You're already 7.5% up. You're never going to pay taxes again in a week. Same thing with tax loss harvesting. And this is why I'm going to rail on this a little bit more, Jason. This is why it's so important when your financial advisor says, let me see your taxes. If they're qualified to handle that, right? If they're a CFP, if they're an EA or a CPA or whatever, they're qualified to handle it. Here's a reason for you to give them your tax return. Absolutely. It's not so they can be snoopy.
Right.
It's so they can say, let's look at our portfolio. We're down a little bit, right?
And don't hide that. Like, right. I sold the rental property or I sold XYZ and I have a capital gain. Don't hide it.
In a situation like this, what are you going to remember? That your financial advisor, that we were up 12% one year or we were down 8% one year? Or are you going to remember my advisor saved me $10,000 on taxes that one year by just reallocating my portfolio after looking at my tax return?
And being in this business long enough now, and I've had some clients do Roth conversions like way back now, and I'm starting to see what those look like. And they're in the retirement mode. Even on that front, it might not come to fruition like right now. The chickens don't come home to roost right away. But now, 5 years later down the road, we've had a couple really good years in there. Yeah, we have a down year now, but they are so far ahead in a tax-free environment. That's just awesome.
Yeah, if you want to calculate the real return on your Roth compared, you got to take your tax-free return, right? You got to take your returns, you got to take your current tax bracket, your future tax bracket, work that into the mix, right? and there's your real return. Okay.
Absolutely.
That's enough of that. I think that was a good episode, Jason. Some really good. This is a way to stay positive when things are a little bit negative, and really,
keep your heads up, guys.
Yeah, make some hay while the sun is shining. Make some lemonade when the markets give you lemons, whatever you want to call it.
Yeah,
that's what we're doing here. So, thanks for having a drink with us this week, folks. It is time to close out the tab. If you have a question or a topic you want addressed on the Old Fashioned Finance podcast, be sure to email us at podcast@bluejfg.com. We'd love to hear from you. Don't forget to share the show with someone you love or just someone who needs a little money muddling themselves. You can stay up to date with the latest action by following us on Facebook. Old Fashioned Finance is brought to you by Blue Jay Financial Group. That's bluejfg.com and produced by Podastery Studios. We've been your hosts, Caleb and Jason. Cheers.
Cheers.
Blue Jay Financial Group, LLC, Blue Jay, is a registered investment advisor registered with the state of Ohio. Registration does not imply a certain level of skill or training. The presence of this advertisement on this podcast shall not be directly or indirectly interpreted as a solicitation of investment advisory services to persons of another jurisdiction unless otherwise permitted by statute. Follow-up or individualized responses to consumers in a particular state by Blue Jay in the rendering of personalized investment advice for compensation shall not be made without first complying with jurisdiction requirements or pursuant to an applicable state exemption. All verbal and written content on this presentation is for information purposes only. Opinions expressed herein are solely those of Blue Jay, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by our firm as to other parties' informational accuracy or completeness. All information or ideas provided should be discussed in detail with an advisor, accountant, or legal counsel prior to implementation.